In this video, we'll guide you through the twists and the turns of the oil market, from upstream companies that get oil out of the ground to integrated giants that cover every step of the production process. We have 3 picks to help you navigate the current volatility of the market: Exxon Mobil, Total Energies, and the XLE ETF. Let's get into it. Chris, Thomas, let's talk about the oil market. We are going to discuss how investors can make the most of this exciting sector. So let's jump right into it. Chris, you are telling me that if I've already been investing in oil stocks, I can continue to do so. But if I haven't, now might be a good time to start. And that's because oil prices were on an uptrend even before the current conflicts. But what do investors need to keep in mind about the future of oil and the market and investing in this sector right now?
Yeah, Lacey, you hit it on the head. If any investor that was investing in oil stocks at any point this year is reaping the benefits of that right now, the takeaway for investors at the moment is that $80 is the new floor, at least for the foreseeable future. The CEO of Chevron this week just came out and said he was forecasting that oil prices are going to go to $100, and that means only higher prices for oil stocks. And this is at a time when many other stocks and other sectors are going to be going down. So if you're hunting for growth, oil stocks are a good place to look for it. Mm-hmm. As far as which stocks to pick, I might lean towards companies that are in the upstream area. That means the companies that are involved in oil coming out of the ground. These companies historically do very well when oil prices are rising because they just generate larger revenue and profits. Some people will take the other side of that right now and say, but that doesn't take into account the rising interest rate environment that might cut into that. So one way to play it is to go with an integrated company. That means a company that hits every bit of the oil production cycle, the upstream, the midstream, and the downstream. And 2 of the companies that I highlighted in my article are exactly that.
Thomas, why don't you tell us a little bit about how this is going to impact revenue and profits in the coming year?
Well, I think Chris is absolutely right about oil prices. Volatility is assured, but we have OPEC Plus and Russia fighting the West to keep production below demand. That's got the oil market skewed higher. Now we've got geopolitics in play, so I think $100 oil is an easy target. What this means is another year of windfall revenue and profits for the energy companies.
Mm-hmm. Well, why don't we get into the specific investments to consider? Chris, you have 3 picks here for investors who want to manage the current volatility in the oil markets. And to start, you had mentioned Exxon Mobil as a safe bet. Can you elaborate a little bit on why this is considered a safe investment at the moment? You had specifically mentioned that they have cash on their balance sheets. So how does this play into the strategy of share buybacks and dividends?
Sure. So Exxon Mobil is, as you just said, it's one of the safest bets in the oil sector right now. It's trading at about 10 times forward earnings, and that's despite the growth it's already had this year. It's still only trading at 10 times forward earnings. So it's valued very attractively for investors. It pays a safe and growing dividend. Right now, oil companies are starting to generate that strong revenue. It's going to lead to strong profits. And this is an area where it can be a little bit, some investors don't like to hear about it, but this is where you get those profits that companies like Exxon Mobil have plowed into share buybacks and dividends. It's shareholder capitalism. It's rewarding your shareholders. And Exxon Mobil is one of the companies that does this very well. I would expect to see more share buybacks, more dividend increases as a way for them to allocate this windfall of cash that they have at a time when it's sort of prohibitive for them to be drilling and starting new projects.
Mm-hmm. Thomas, I think that you also have a positive outlook on Exxon. So what makes it stand out to you?
I think Exxon Mobil might be the best single stock play in the sector. I mean, it's the world's largest integrated oil company outside of China or Saudi Arabia. They're growing, they're cheap, they've got a great dividend. My only real problem with them is the dividend is below the XLE, the sector average, but that's offset by a robust outlook for dividend growth. The company's cash balance is phenomenally large compared to historical levels. Cash flow is growing. So I see some pretty nice dividend increases over the next year or two.
Chris, you had also highlighted Total Energies and their commitment to paying out cash flow from operations to shareholders. Can you explain to us maybe why this commitment is so significant to investors?
Yeah, I hinted at it a little bit when I talked about Exxon Mobil. It's the fact of, so what do these companies do when they have this revenue and this profit? And that what really impressed me when I looked at Total Energy is what you just said. They're committed to paying out at least 40% of their cash from operations to shareholders.
Mhm.
And as a shareholder, that's what you want to see. You know, the price of oil is cyclical, but dividend payments and share buybacks are the type of things that make oil stocks worth holding on to for the long haul.
Thomas, do you have your eye on this stock at all?
I actually had never heard of this stock before, but I'm glad that Chris brought it up. I did check it out. It's got a pretty nice dividend. Dividend outlook is pretty nice. And I don't know that Chris saw this, but just this past week, they increased their dividend outlook target to 45% of cash flow.
Oh,
so
wow.
I see some more substantial dividend increases with this stock.
Awesome. Well, yeah, I mean, like you had said, you hadn't heard about it before. That's what we're trying to do here is bring some stocks to investors' attentions. But Chris, you had also have the XLE on your list, and this is the choice for investors that are seeking broad exposure. Explain your reasoning behind this one and the placement on the list.
Sure. The placement's actually pretty easy, Lacey. I chose, 3 stocks from my article. At this point in time, I could probably have chosen 30 when it comes to energy stocks. It's just a ripe sector. But the XLE is the type of sector that gives investors broad exposure to the entire sector. Of course, they own Exxon Mobil. They own Chevron as part of their holdings. They own Occidental. I mean, all of the stocks that you would want them to hold. And they own others that we've talked about on this channel, Schlumberger, Halliburton. The point of the XLE is it gives investors broad exposure to the entire sector. Now, having said that, you could make the argument that investors might be they could look at investing in a couple of the stocks or 2 or 3 of the stocks that are in the XLE fund itself, and they might just be better off investing in those stocks by themselves. But there's no issue with just investing in the fund.
Well, that's my thought exactly. The XLE gives pretty good broad exposure to the sector. As far as an ETF goes, I think it's got better allocation than some of the other SPDRs. Some of those things are 25 or 30% one stock. XLE, I think the biggest holding is 10%. But also, like Chris says, you can go in there and cherry pick a few names and get 100, 200 basis point better dividend than with the fund itself.
Well, guys, today we've explored the potential, analyzed the outlook, and provided some top-notch oil stocks to consider. If you found our insights valuable at all and you want to stay updated on the latest market and investment opportunities, be sure to subscribe, hit the notification bell. And for those of you that are seeking real-time updates and alerts right to your phone, don't forget to sign up for our SMS alerts. All you have to do is text MarketBeat to 68285. Those are free alerts right to your phone, or you can click the link down below. Thank you so much for joining us today. We look forward to helping you make informed investment decisions in the future. Until next time, we'll talk soon.